Perry with Broker Knowledge Group. It is August 3rd, and today your Wednesday update is going to be another new good faith estimate and truth in lending statement. Now, I know a couple months ago I came out and gave you a new good faith truth in lending that they had proposed. And this week I'm doing the same thing because they released another one. What they're doing is they're asking the industry what they think, they're asking consumers what they think, and then they're giving us, what we've asked for. So it's really cool that they're doing that. You know, the Fed, when they released the Fed rule, didn't do much for us. As far as communication, whereas the Consumer Financial Protection Bureau actually is communicating a lot. So let's dive into the forms. To get there, you would go to consumerfinance.gov, and this is the CFPB, or Consumer Financial Protection Bureau. They are off the ground. They started rolling on July 21st, and this is one of their major priorities. So I just clicked on Time to Simplify the Mortgage Disclosure. That takes me here to their Know Before You Owe. When I'm there, I'm going to switch over to the Industry tool, and it's going to give me two options. So these are the two forms that they've released for us. Now, page one of the form is going to be the same whether you choose the form number 1 or form number 2. So I'll show you that, and then we'll break down each of the forms. So this is form 1 and form 2, first page. The first thing I want to point out that I really love is the very top. It has date issued, loan ID number, and then also it says your interest rate, points, and lender credits can change unless you lock the rate. All other estimated closing costs expire on 8/15/2011. So the cool thing is they, in one statement, are able to say, look, your rate's not locked, so that can change all at once. Your closing costs are, firm and committed. So rather than having all the lines on the first page of the GFE, it just says it up there. It's just really easy for somebody to look at and go, okay, great. And then when you look at page 1, I actually love page 1. For most of your borrowers, they just want to know, how much is this going to cost me? What's my loan amount? And what do I have to pay every month? And they actually get that on page 1, which is great. And they get it in a pretty easy to understand way. You've got the loan amount, interest rate, monthly payment in the top. And then it says, can these increase after closing? So if your borrower does have an ARM, then it's going to show up there. It's going to say yes. And it's probably going to give them some detailed information on that change. Right below that, you have projected payments. And so this is going to be, on a 30-year fix, 15-year fix, whatever. It's going to be pretty much the same thing. You'll have all the payments will be the same. If there's a balloon, then obviously you'll have the final payment. At the bottom, it says comparisons, and you've got estimated closing costs, which is great. And you can see page 2 for details. You've got the APR in there, which I think is awesome. And then also in 5 years, what's owed. So I think this is really cool, and it's a good start as far as page 1 goes. Now, when you get into page 2, depending on which option we choose, you're going to either get a lot of information or a little information. And so when I'm looking at this Azalea, I will notice that first form is going to give me, if we go over here, page 2, it's going to give me a very simple breakdown. So as you can see up at the top, it says Azalea Savings Bank to let you know you're staring at the Azalea form. Again, you have the contact information, which is cool. But then when it goes to estimated closing costs, it summarizes them all, but in a pretty good way. So on the box A, origination charges, you can see the origination services, which is going to be your origination fee and all the other, underwriting, doc prep, that stuff. And then you're going to have 1 point paid for interest rate. So that's your discount fee. So it does break that out in a really good way. Below that, services you cannot shop for. Now, this form doesn't break those out. And so kind of interesting that your borrower's not going to have that detailed information. And I don't know how you feel about that. I'm okay with it, but, let's get your feedback out there as well. Services you can shop for gives them the title, the attorney, if they have one, a survey, and inspection. Now, note that title services and lender title services does a big grouping again. My only concern is if owner's title is going to be in there, we've got a problem. So that's one thing that I don't think we have clarity on quite yet. And then you have your lender credits in box E. I think this is really easy to read. And the thing I love about it is estimated closing costs is A plus B plus C plus D plus E. And those are all right there. As opposed to the last form we had, which was, box A plus B, multiply times pi, put it in a radical form, then break it out of the radical. It was just a nightmare. This one's pretty darn easy for your clients to read. At the bottom, this is revolutionary. Cash to close. Cool. So this tells them what their cash to close is, how much they're going to need to bring in, and it also offsets for seller credits. So now we have a place that we can actually show that credit, and that's cool. I'm not sure on the closing cost to be financed, what number's coming in there. It's a little weird. I'd like some clarity on that. And then the only concern I have in this area is where it says insurance and property-related bills due at closing. I've got $1 amount, and I'm concerned that maybe if that's not broken down, a borrower is going to be really confused about how much is going towards what. And I think I'd rather them have that breakdown. I know when I was buying a house last year, I was looking at, where is everything going? Because I did like to have that breakdown myself. So I'm not sure I love this form, but it is a nice summary. For your average everyday Joe borrower, I think they're going to be fine with this, and that's the Azalea. Now, if you looked over at this other one called the Camellia form, there you've got Camellia Savings Bank at the top. Hey, do you recognize this? You probably do, because this was your old good faith estimate. It's kind of the same thing we were giving out for years and years and years. I like it. It gives the borrower the detail. It brings back a wire transfer fee, a processing fee, an underwriting fee. It brings back a breakdown for the borrower so that the loan originator doesn't look like a big chump charging a bunch of fees, but it actually shows you where those fees are going. So I do like this second form. I like it because of the detail for somebody who really does want to know where their money's going. The other thing that this form makes it easy to do is break down the appraiser versus an appraisal management firm if one was used, because part of Dodd-Frank is going to require the disclosure of that. So anyway, I like this one. I feel good about it just because, I think your borrower's used to it. They're used to looking at this type of format. The only thing we're missing is like line 801, line 802, and all that stuff. One thing I would remind you is we're not getting any HUD-1 comparisons right now. So they're releasing this good faith truth in lending so that we can work on it. I'm anxious to see how a HUD-1 is going to convert all this information in a way that the borrower is going to understand. So if this becomes my HUD-1, I'm really happy, because then I feel like the borrower is going to be on the same page that they need to be on, and in the same mindset that they were on when they started to work on the loan. Here's the funny thing, by the way, and then we'll be done. On B, services you can shop for, I love these fees. I mean, I got a rush fee of $14, a credit report fee of $9, an appraisal fee of $305. Somebody should probably let the CFPB know that all of the laws that they're currently regulating that have been recently modified, all those laws raised every one of those fees. So I think it's cute that the CFPB is like, this is pretty much what we estimate these fees to be, when the rules that they'll be writing will be the ones that basically increase all these costs. So I don't know who's going to make that phone call, but somebody should probably let them know. I think it's also interesting that they're giving borrowers this estimate and asking borrowers how they feel about the good faith. And the borrower looks at this and goes, processing fee of $50? That's funny. Mine was $500. I don't think these are realistic fees. And so on a side note, I really wish they would have done a better job at giving us a more accurate amount of what these fees are really going to be, just because it might confuse the borrowers to see this and then find out later that these things cost just a little bit more than they've estimated. So anyway, that's your update for today. You guys have a great week. Hopefully this helped, and I will catch you guys next Wednesday. Thanks a lot.